Well, with these fears that they kind of stack up, if you will, like even
Yeah.
just lack of a clear path. What options are out there when it comes to a senior homeowner who has a home and maybe very limited income, but they see they've got a lot of equity in their homes.
Yeah, and there are options. And in fact, it's interesting because the process, oftentimes with a senior homeowner who's got lots of that equity and they do want to tap into it, uh, in part because there's so much misinformation about reverse mortgages, that's causing still a majority percentage of the senior homeowner market, the public, to be fearful of the product and tend to want to shy away from that. But they'll yet still want to look into, what can I do to access my equity? Well, the most common things, and other than the reverse mortgage product, we'll put that on hold here for a second. You can get a fixed rate second or a regular HELOC. Now that's getting a loan as well. The difference is those types of loans are traditional in the sense that you've got to make a monthly payment. So that those are the two obvious things that happen, that we will get an initial inquiry for. Hey, I want a second mortgage, either a fixed or a variable rate HELOC, because I need to get some money. And then the other option is just a traditional cash out refinance. Get a first mortgage with cash out. Either get a new first mortgage if you're free and clear on the home, and that mortgage, of course, is providing you cash, but you got to make a payment. Or you've got a small mortgage and you're willing to give up that low rate on that small mortgage because you need another 150 grand. You get a cash out refinance, a new first, to replace your existing first and get the cash out that way. But again, you got to make a payment on that. So that can be a little bit tricky. And in that respect, you've got to consider, therefore, if you pursue any of these other options, what does that do in terms of impacting long-term affordability? If you go the traditional route and you take out a loan with payments, are you going to be able to handle that going into the future, in particular, while you're also having to manage your taxes, your insurance, upkeep to the home, and so forth? So that you've got to be real certain about what option is out there that will also address that long-term affordability question, because that can be real and it can be significant.